Wow. That is all I can say. 2019 has been absolutely incredible. I've heard so many great stories about listeners who've learned a tremendous amount on this show and others and have just radically changed their perspective on investing and a variety of other topics. I hope you had an absolutely excellent year. In this short Monday Minutes, we're going to talk about some of my biggest key takeaways for 2019. And then in the next Monday Minutes, we'll talk about some of the things you should be focusing on for 2020. I think that's a good segue. Before we even jump into this, though, I want to say something pretty cool. Raising Capital for Real Estate hit #1 on Amazon for hot new releases in commercial real estate, which is absolutely awesome. So what that means is it's time to thank you guys, because this is not a result of paid advertising. We haven't done any yet. This is not a result of doing some little gimmick where we get #1 on Amazon for hot new releases in some obscure sector of the book world. It's in commercial real estate, and it's all because of listeners like you. And this doesn't include 90% of the book sales because they've been done on our website, Raising Capital for Real Estate, as opposed to Amazon. So that is overwhelming. We have sold books from LA to Singapore to China to Germany, and it's all listeners of this show and people that are part of this podcast community, which is just absolutely amazing. I'm going to thank you again later in this episode, but I just want to say up front, you guys have made this an incredible year. And it's amazing because I just love providing value to the people that I care about. And I care about all listeners of this show. So thank you so much. I'm going to jump into these quick takeaways and we'll circle back a little bit about 2019 and the thanks that I want to give you guys, because that is really the point of this whole episode. So #1, strategic partnerships are absolutely critical. And this is something that I've really started to understand this year in a way that I didn't previously. As you probably know, I'm a huge proponent of diversification, but especially late in the cycle, I am far more concerned about making a bet on the right teams. I don't want to get in the habit of praying and spraying with my investment capital. And this is one of the ways that I think about this. So if I could just have 10% of my portfolio invested with 10 different operating partners who operate in different geographic locations and asset classes and risk profiles, have different investing strategies, I can feel very protected if that's the case. 10% of my portfolio, each with one operating partner, so a total of 10 operating partners. And as long as they have a diversified strategy, I sleep like a baby. Now, the truth is, as of right now, I probably have 4 teams that I feel that way about, that I feel like I can invest with them for the rest of my life. And it's taken me about 10 years to get to that. So it'll probably spend another 10 or 15 years trying to get another 5 or 6, at which point I'd likely have 10. The problem with that assumes that there's no turnover, and that can certainly happen. So I say all this to say this. I think that paints a very clear picture of how seriously I take these sorts of relationships. And I realize that these relationships are the key to me feeling protected. If I can just create one really impactful strategic relationship that I can use for the rest of my life in 2020, I will consider 2020 to be a major win. And I've realized that this is the most direct route to help me in terms of moving the needle in my business, but also help my personal investment portfolio achieve that diversification that I mentioned. So strategic relationships are a massive, massive takeaway for me for 2019. #2 is access to information makes us better investors. I want to thank everyone who's become a new listener in 2019, but I especially want to thank everyone who's been listening to this program since the very beginning. One thing that's become really clear is that this show and others like it are playing a role in terms of this massive change that's taking place in the financial sector. There's a revolution taking place in the financial sector, and it's a result of access to information, something that I believe needed to happen for quite some time. There's no longer these massive barriers to entry and gatekeepers required to get access to the information that people are using at the ultra high level, at the largest private equity companies in the world. So you can use this to your advantage. Yes, you can get a lot of information from listening to podcasts, especially if you've got guests that are giving away significant information about data that they themselves have curated or looked up. CoStar, for example, a company that's all they do is real estate data. But you can also get some of the data yourself. You can Google census data, or you can use websites like bestcities.com to do due diligence. Or there's another tool that I use, which is ESRI Business Analyst, which takes real estate data and puts it into a digestible form. This is basically census data that you can see as an infographic. And I really like that program, so check it out. Also, you can learn more about how to access this data by listening to Neil Bawa's interview, episode 109, where he talks about accessing information to conduct due diligence. Also, Neil Bawa, if you like him, which you definitely will, if you like this program, you'll like the content that Neil talks about. He's going to be a guest at IREC as well. So make sure to check that out at intelligentinvestors2020.com. Number 3 is unique ability. In the 3rd chapter of my book, Raising Capital for Real Estate, I talk about this concept, and I say that it is one of the most powerful business concepts that I have ever been exposed to. It's basically talking about the fact that a lot of people, especially in school, teach you to focus on your weaknesses, but the reality it is far more lucrative to focus on your strengths. And then to more clearly define what your strengths actually are, they bring in this concept of unique ability. And this is the thing that you are most gifted at, the thing that when you complete the task, your peers are always asking you about, you're always getting praise about, but it seems to come naturally to you. Something that when you do it, it adds a lot of value to others. And when you're operating within it, you feel like you can work 16-hour days without even blinking. Basically, the concept is the more time you spend operating within your natural unique ability, it's going to be more lucrative because you're going to devise your labor, focus on the things that actually bring a ton of value to your business as opposed to focusing on your weaknesses. And number 2, and this might be the most important one, focusing on your strengths allows you to actually live a good life as opposed to constantly hitting your head against the wall all day trying to get your brain to learn skills that it's not automatically wired to learn. And this is a really, really powerful concept. Like I said, it's the opposite of what you learn in school. What you learn in school is that if you get an A in science and a C in art class, all of your teachers are going to tell you, focus more of your energy on art class. You need to get that C and turned into an A. That's not the way the world works when it comes to capitalism. Capitalism is all about devising labor, getting economies of scale, getting expertise in your strengths so that more and more people want information from you, want you to be operating within that strength all day. And by the way, it allows you to live a good life because people like focusing on your strengths. Now, of course, this doesn't mean that your life is going to be easy. It means that you're going to free up your time to be a master within your unique ability. More of this can be learned about in episode 120 of this program. Number 4, staying invested is critical. So as you probably know, I first got into this business when the sky was falling. I mean, there was a time when I was investing in real estate. As I was signing my first checks, that 40% of all of the sales in Las Vegas were foreclosures. It was a total bloodbath. And because of that, prices were very deflated. So basically, I got really spoiled when it came to accessing really underpriced deals and really high cap rates and really high cash flow. Now, because of this, it was really hard for me to continue to allocate capital as the recovery was well on its way. Because I remember the day, for example, when mobile home parks were trading at 10 caps. And I felt like that was a fair price that mobile home parks should be trading at. So I always thought of mobile home parks as, okay, yeah, great. 10 caps are a good deal. Anything above that is a great deal. Anything below that is probably not a good deal. But this simply isn't the case. This is just not how things work. From a micro perspective, in the sense that mobile home parks, the cap rates have changed significantly, and there's still great deals to be had on a risk-adjusted basis in the mobile home park sector. But also from a macro perspective, this isn't really the strategy for creating long-term multi-generational wealth. It isn't about trying to get 25% annual returns for 4 years and then wait another 70 years for another 2008 situation. Anyone can do that, first of all, but also this isn't actually a lucrative investment strategy, and it's not a favorable investing strategy on a risk-adjusted basis. Like, I'm sorry to say that, as I know that a lot of people may feel inclined to that, or may feel inclined to want to invest with people that are waiting for those once-in-a-lifetime type of situations, and I totally get that. I was formed out of that era. But this just isn't mathematically sound. You can compare getting 25% returns for 4 years, once every 70 years, to someone who just generates 8% returns annually for 70 years. It's not even close. Now, having said that, this took me a lot of time to come to terms with. So the question becomes, how can we intelligently participate in all stages of the market? We don't want to be exposing ourselves to unneeded risk, but at the same time, we have to be able to generate consistent returns so that the miracle of compounding interest can actually work. So it really comes down to, and this is, again, something that I thought a lot about, not to say that you should take my advice, but from my perspective, it comes down to finding investment strategies that are preferable in different stages and adjusting and alternating your strategy as the market changes. And I think we have a fund right now that's doing a great job of this. We have a property that we just purchased that's 93% occupied, and the break-even occupancy is below 69% in a market that's about 94% occupied. That's not the entire picture, obviously, but it paints a very good picture as far as the risk profile of that deal. And part of the reason for that is that the debt component is very conservative or exceptionally conservative. Now, of course, I can go on and on about this topic. You've heard me talk about it before, but the key is generating consistent returns is the way that multi-generational wealth has been created historically in this country. And I want to continue to do that, to put myself in that position, my listeners in that position, and our investors in that position. That's really the goal. That's why those long-term relationships are so critical, because it's not about a 4-year hold period and then great, you doubled your money in 4 years and now you move on for the rest of your life. If you want to hear more about this, specifically as it relates to our current fund, you can check out episode 103, which I think paints a very clear picture of the big picture of how to invest in today's economic climate. Okay. It has been an absolutely fabulous year at ASIM Capital. And the reason for this is I am just very, very thrilled that I get to do what I do. I'm very grateful for everyone that listens to the show. I love the clients that I work with. I love the listeners of this program. I love the team members that we acquired over the year. And I just love what I do every day. And I'm 100% in this position because of the listeners of the show and the investors of our company. You guys motivate me every day. You inspire me. I'm just very, very grateful for each and every one of you. I mean that from the bottom of my heart. In fact, it's true, because why else would I be doing these Monday Minutes? I mostly do it because I want to connect with you. I want to do whatever I can to help you. I want to be able to help your business because you have done a lot for me. And again, that's really the key here. So I can't thank you enough. I hope you've had an excellent 2019. But trust me, we're just getting started. Next episode, we're going to talk about some of the things to focus on for 2020, some of the things to pay attention to, some of the things to watch out for. But let's close the book on 2019. Let's celebrate the big wins if you had them. And let's look forward to getting after it in 2020. Thanks again. All right, listeners, you know the routine. This show is all about learning, making wise investments, and protecting and growing your capital. So if you're interested in these topics, make sure to hit the subscribe button. Of course, if you've already enjoyed a couple of great episodes, don't be shy. Leave a review. It really helps the show's visibility. And lastly, if you're an accredited investor and you're interested in learning more about our investment opportunities, the types of deals that I personally invest in, go to asimcapital.com. That's ASYMcapital.com. Thanks a lot.